On the surface of it, there are a number of similarities between IAS 1 and IFRS 18, and they are indeed covering the same broad area, which is to do with the presentation of financial statements. So you might well ask, why do we have a new standard? And it's when you dig below the surface, you really start to appreciate some of the significant differences that there are. And one perhaps which is really striking is that the financial statements, in particular the profit and loss statement, there is a much greater emphasis on profit and loss information in IFRS 18 than there was in IAS 1. And that's quite interesting because many standards deal primarily with the balance sheet and also, of course, to some extent, the implications for the profit and loss account. But maybe the main focus in many standards has been on the balance sheet. And perhaps there's an endeavour here to try and even up the balance and to get more on profit and loss, which still has a very, very important repercussion for people. So what we find in terms of detailed differences is to do with the prescription of the presentation. In the past, there's been quite a bit of flexibility allowed, and whilst that's still to some extent the case, there are some areas where more specific information is now required. In particular, the profit and loss account must be reported in 5 main categories: operating, investing, financing, income tax, and discontinued operations categories. So that's the way the profit and loss statement must be divided. And in addition, there must be subtotals given for these areas within the financial statements too. So that's definitely more prescriptive than was the case previously, and a fairly fundamental change, which even larger companies might have to do a fair bit of work to comply with, because if you analyse what many large companies are currently doing, they won't automatically meet those requirements without making some changes to their accounting and reporting setup. I guess the other main difference is to do with disclosure information. Now again, there is a lot of similarity between IAS 1 and IFRS 18 here. It mentions very generic things like the need for proper cross-referencing and a systematic organisation of disclosure notes. But there is one major difference. There is now a much greater emphasis on disclosures around financial performance measurement. And that's one area where it's definitely worth a closer look if you are involved in the preparation of financial statements, because potentially that could make quite a bit difference to what you have to do going forward.